So, hello, everybody. How we doing? This is 26th of March, 2013. This is 50 pips. And I'm just doing a quick update on cable. I promised I'd try and do some one or two videos this week since we didn't do a weekly review on Sunday. So again, I'm not making any calls or recommendations. This is just for educational purposes. So the fact that you're listening to this means you've read, you understand, you accept all the disclosure and disclaimers, where we're just performing some live technical analysis in a learning context for educational purposes only. So what's going on cable? Let's get this chart up. There we go. So we've had a very aggressive sell-off. If we look at the daily, cable's been pressing down quite aggressively. And we seem to have based just ahead of the 148 levels. Let's put that up on the chart to give us some context. There we go, the 148 level, okay? So we've been talking about the fact that basically looks like this level was protected and we're starting to get a bit of a retracement. This could have been the potential healthy retracement we're talking about, we were looking for, and meaning that this could easily go back all the way into the 50 back of the most recent drop down into the 155.80 and still be in a negative trend, okay? So if you want to have an idea for that, you can even put a 200-day moving average on your chart, and you see that that 200 days still up in these 57s, okay? So this could easily come back all the way up into this area and still be in a downward trend, okay? It doesn't mean that this recent trend's completely reversed. Now, having said that, what are we looking at in terms of the more short-term action, okay? So going back on a 4-hour chart, what we were looking at and we discussed for a long time was this whole chop zone. We called it a chop zone, right? Which was the whole area where we got that initial gap down, okay? It looked like we're trying to base here, then we got bam, aggressive gap down, came back up, filling the gap, sold, came back up, sold. So basically this was a whole area where we were looking for direction. We couldn't trigger any downside, but equally we couldn't trigger any upside either. And once we broke down, that's when the final leg down took place, but we couldn't really get a lot of momentum. Then what we said is, on a hold here, look for it to come back into this chop zone, and that's what's going to dictate direction, okay? So we come back in, bam, as expected, on this move up. Where does it get sold? Right ahead of this previous resistance, and we start to chop around in the same area we were expecting it to chop around. So just so you can drag this across, okay? So this is what's really interesting in terms of the rotation, because we came back up, we started chopping around where we expected it to chop around, and now if we had broken back down, then we would have looked for another aggressive push back down to continue the downtrend. But since we had some sideways chop here and ultimately started to break to the upside, it looks like we could be seeing this move, which we're talking about, back up into 55.80s. Okay, what's very interesting in this, and for this to continue, there's a key market action here which took place on the data release the other day. Okay, so let's just put a couple of lines here to highlight this. So we can call this pretty much, you know, the gap down level, and we have the highs from this zone. So just to make sure everybody's clear, gap down and the high. So this is the chop zone we were talking about, okay? Now, if you go back onto a 1 hour, what you can see is that market came back up, started chopping around, and then what happened? We've got an aggressive push below this zone, which could not find any sellers and find buyers coming in very aggressively, and we popped up pretty much, was it, I think if memory serves, over 130 pips or something. We popped at about 130 pips. Then what happened? Straight away we got sold down extremely aggressively. Look at this wick. This wick is probably 100 pips or so, 80 pips, okay? So we go back down, market tries to trigger downside, and yet again, bam, buyers are coming in again. So at this moment, this is really the line in the sand, the attempt to break out of that sideways consolidation zone to the downside again, that failed. Okay, so as long as those lows hold, we'd be looking for this to continue to rotate upwards. Now, what's especially interesting is also if you look at the most recent move from those lows into those highs, we tried to get some selling and some pressure on yesterday, and what got bought? The 50 back to the pip. So again, short term today, this is really a key level, right? As long as the buyers that are here still manifest themselves and we can't break lower, then I would expect to see, let's just go on a 4-hour chart and let's try to clear this up a bit. So make sure it's not too confusing. I would expect to see the market continue to try and grind higher, okay? Possibly into that level, and the level to watch to the upside, we've been discussing this on Twitter, is the 153.00. Okay. And if we break yesterday's dip low, then most likely the market will try and take a stab at those very, very important lows, which we discussed, where the buyers were aggressively coming in. Okay, so those are pretty much the levels to watch now going into the action today. Let's see if we can clear this up, or this is going to be looking way too messy for my liking. Okay, so we've got those dip lows coming in at basically 50.20, so protection of the 50.00. The mid-range here that caught a bid yesterday, and then the 53 to the upside. Those are the key levels I'd be watching for this rotation, okay? I hope that makes sense. I hope that was useful. I'll try and post this. Let's hope this doesn't take too long to update. If you like the content, don't be shy about don't be shy about sharing it. Have a great day. I'll see if I can do another video later on. Okay, take care, guys. Bye-bye.